This is the Asia Trade. I'm Shery in Seoul.
I'm April Hong in Singapore. The top stories this hour. Asian stocks set to follow Wall Street higher amid solid corporate earnings reports and signs tensions between the two biggest economies are cooling. President Trump saying he expects to reach a trade deal with China after he meets next week with Xi Jinping. Rare earths among the issues Trump says are top of that agenda as he signs an $8 billion critical minerals deal with Australia.
So we'll be watching those rare earth miners that already saw a boost in anticipation of this deal. We'll also be watching forward to the parliamentary vote in Japan. Of course, we are expecting now with the ruling Liberal Democratic Party forming a new coalition with Japan's Innovation Party for Sanae Takaichi to become the first female prime minister of Japan. The Japanese yen has been oscillating in that 150 level against the US dollar, but we're also watching JGBs that were under pressure as a Bank of Japan member talked about the need to lift rates soon, given the price pressures to the upside in the economy. We're also watching the Chinese yuan seeing some gains against the US dollar, all in anticipation, of course, of the ongoing US trade negotiations. Not to mention that we have third quarter economic data slightly beating estimates as well, April.
Yeah, you talk about those cooling US-China tensions. That's also helping to fuel the so-called everything rally, where we're seeing stocks along with gold. Treasuries also climbing, by the way, 10-year yield below the 4% handle. And this is despite also how we're seeing that risk outlook improving, gold still reaching fresh record highs. Investors took the Friday sell-off as a chance to pick up yet more of their bullion. And of course, when it comes to stocks, this is also supported by the National Economic Council's Kevin Hassett talking about how there might be an end to the shutdown sometime this week, he expects, but also how earnings have performed so far. 85% of the companies that have reported on the S&P 500 have beat profit estimates. So a bit of a head scratcher, but this is where we are on the so-called everything rally, Shery.
Yeah, and to our top story, President Trump now listing rare earths, fentanyl, soybeans, and Taiwan as the top U.S. issues with China ahead of his meeting next week with Xi Jinping. Trump says he believes a trade deal with Beijing is possible.
I expect we'll probably work out a very fair deal with President Xi of China. So most of you will be with us. It's going to be very exciting. And I think we're going to work out something that's good for both countries.
Let's bring in Bloomberg senior editor Derek Wallbank. Derek, of course, the issue of Taiwan, very important for regional security as well. What did President Trump say?
Well, yeah, it's absolutely critical, isn't it? And look, Trump and Xi have a small army of things to talk about when they meet together in Asia, and really trade is high on this list, but you can't forget about geopolitical security either. The Trump administration and China have gone back and forth, raising the temperature with a series of sort of tit-for-tat things as they go up to this landmark meeting. They've put a lot of emphasis on it, and they've put a lot at stake as well. Look, the United States has floated the idea of a 100 percentage point increase in tariffs on imports from China. So that's really not nothing. And Trump keeps coming back and saying that that is a thing that could happen, although when pressed on it, he keeps saying that he doesn't actually think that's going to happen. So that's a sort of a key kind of indicator, if you will, of where he sees the chances for something coming up. But look, let's be clear. There is an awful lot at stake here. China has long had its claim about Taiwan, and the U.S. has been Taiwan's essential defense benefactor for defense equipment and other things of that nature. So in very real cases here, there is a lot of focus on whether Donald Trump will come out and say that the United States will continue to provide that, continue to sort of offer, sort of weaponry as a thing that it's selling Taiwan, or if it's going to, kind of phase that down a little bit in order to keep good relations with China. There's an awful lot at stake here.
Also at stake, how the U.S. is looking to reduce its reliance on China overall when it comes to supply chains, and it's turning to Australia to do so with the inking of agreements on critical minerals. What do we know?
Yeah, that's exactly right, Avril. And look, I think one of the things that you've seen from the Trump administration in recent months is that they've been really sensitive about anywhere where China is seen to be able to exercise kind of a trade veto over whatever the United States wants to do. And critical minerals is one of those things. Rare earths is one of those things. And so you're seeing here with this deal with Australia to increase U.S. access to critical rare earths, you are seeing here the United States trying to diversify its own supply chain. And really, when you do that, part of that is economic, but a lot of that is security as well. J.D. Vance said, a while ago in a sort of statement, I think got a bit of attention at the time, but ought to get more. You cannot sit there essentially and say that you want China to sort of produce everything that the United States needs and also have a bellicose, strategy towards China. You can't rely on them for everything and go to war at the same time, and he was very clear he didn't want to, choose that bellicose option, but he was making a fundamental point. And the fundamental point he was making was essentially that the United States needs to have its own situation together economically if it wants to be strong and secure in the 21st century. And here we are. Over the last year, we've seen critical fault lines be exposed. Trump is trying to move swiftly to underline and underwrite the United States here.
Derek, thank you for the latest on that. Bloomberg senior editor Derek Wallbank for us. Now, we also want to talk about the market implications, and as we just been digesting earlier, unpacking really how stocks are still running ahead as U.S.-China tensions ease. Let's bring in Carol Schleif. She is Chief Market Strategist at BMO Private Wealth. Carol, good to see you. We are seeing U.S.-China tensions easing, and that seems to be supportive of equities. How important is it that we see follow through, though, on a U.S.-China trade deal?
Well, I think trade deal is part of it, but also earnings are part of it, too, because, markets have been trying for months to move beyond the trade war, and we saw it pulled right back up to the front burner a week ago Friday with the back and forth between President Trump, President Xi over the weekend about, a variety of things, the rare earths and then the U.S. and the tit for tat that went on. But that's a piece of it, and pushing that back off the front burner and assuming that the two are going to meet and they're going to have discussions, and that it isn't something that's going to be settled quickly. Obviously, there's a lot to negotiate here, but I think it allows the markets to turn their attention back towards earnings. And we've got a big earnings week this week with something like 20% of the S&P that reports this week.
And do you see, in terms of earnings, big tech as the next key test for stocks?
Yeah, it definitely will be a test for stocks, because if you get any sort of hint that something's awry among where all the most significant leadership and optimism has been, you could see a temporary sort of collective inhale of breath from investors. But I think it's important to remember, though, that the underlying economy is still solid, even though we're shut down and don't have good, firm economic stats on it. We've got lots of tangential evidence. You'll hear it from the companies. There'll be a lot of parsing of not only the earnings themselves, but more specifically the backlogs, the spending, the employment levels, the CapEx plans. There's a lot going on that's actually pretty positive, and we think you'll see that pulled through the earnings season pretty consistently.
Which is why you understand that those risk assets are gaining ground. But what's happening with havens as well? Because as this chart shows, we're seeing an everything rally with gold reaching record highs, treasuries also continuing to gain ground.
That's exactly right. I think it's the way investors are doing a barbell sort of strategy that I don't want to get off the growth train yet, but I'm a little bit nervous at the edges. It's one of the reasons why you've seen some almost hyper activity, if you will, in terms of it was a mere tweet that went out, or a social post that went out on that late Friday afternoon, and markets reacted really instantly and really aggressively. And so, yeah, I think gold, bonds, traditional, even the dollar's behaving better. And so you're seeing people trying to pull some assets out there. But there are other places, even in the stock market, to hedge that aren't the Magnificent Seven. There's lots of other industry groups and portions of the global equity trade to participate in as well. So having that diversified portfolio should help guide through some of this if we do get interim volatility.
Does a delayed release of the September CPI data pose risks for markets if we're at these levels?
It possibly. I mean, the whole reason the CPI is out there is because the fiscal year end was there, and that CPI undergirds things like Social Security cost of living increases, 401k, gifting increases. There's a lot of stuff that's tied to that annual number. And so while investors will take it in, they normally would take it in along with the CPI or the PPI and the PCE and lots of other things out there. So it's one data point. And I think the more critical thing for an intermediate or longer term will be the longer we are shut down, the more likely it becomes that some of the data we'll never get because of it being survey data and things like that. So we need to get the government reopened and the statistics mills generating again for the longer term. But in the meantime, there's a lot of other sources for people to look to, not the least of which is earnings and company managements and the Fed's beige book and things like that.
Even as we look to the potential end of the shutdown in terms of U.S. politics and the impact on markets, is also that gearing up for the midterms. What are you seeing in terms of how markets will likely shape up in the year ahead?
I think the interesting thing is that with the midterms coming, and clearly the administration is very focused on wanting to watch those midterms and be supportive, if you will. And that's where, with a lot of the trade policies and the immigration policies, a lot of the things that were potentially disruptive of markets got done early in the term. And now the focus really is on how do we sustain growth? How do we reduce regulation? How do we get markets boosted again? And honestly, one of the other side effects that you've had of a government shutdown has been in the IPOs that were queuing up. If they weren't approved, they're not out. And so you've got a backup in some really high quality IPOs set to come as well, and that's supportive of markets. And so you've got an administration that'll be very focused on doing everything they can to support that economy and to keep the growth going into the midterms.
Carol Schleif, always good to have you with us, Chief Market Strategist at BMO Private Wealth. And take a look at how rare earths miners are trading across Australia right now. Of course, we saw already those big gains in the previous session in anticipation of that deal between President Trump and Prime Minister Albanese in order to boost access to critical minerals. And you can see Resolution Minerals gaining almost 20%, Lynas Rare Earths also jumping more than 4%. We also have some idiosyncratic news coming from Arafura Rare Earths, getting Export Finance Australia's approval for up to $100 million investments in the company. Arafura now referring to Export Finance Australia's conditional approval. So we are getting some lots of headlines and news coming from the rare earth sector across Australia. And you can hear more about Australia's economy in the coming hours when Treasurer Jim Chalmers joins Insight with Hazinda Amin live at 11:30 a.m. in Hong Kong. That's 2:30 p.m. in Sydney.
Meantime, coming up on the Asia trade, the Council on Foreign Relations weighs in on Japan's shifting political landscape. Hamilton Lane tells us why they believe private markets remain resilient. And the University of Sydney unpacks the outlook for US-Australia relations. Much more ahead. This is Bloomberg. Now, Now, another story we've been tracking, Amazon Web Services, the world's largest cloud provider, says operations are back to normal after a widespread outage that hit a broad spectrum of customers across the globe, from government agencies to financial platforms. Let's head to San Francisco, where Sarah Fryer is leading our big tech coverage. So, Sarah, Amazon says they're back to normal now, but this took a really long time.
When something like this happens to one of the cornerstones of the internet, they have a third of the cloud computing market. A large number of services are entirely reliant on that being operational. It really is noticed, and it's simultaneously a moment to recognize how powerful this company has become and how vulnerable these services are to its disruptions.
Yeah, you talk about the vulnerability because we've already seen a major outage back in 2021 by AWS, right? So could this be a systemic issue, or are these isolated incidents, and how well are they being dealt with?
Well, this one, I think, took a long time to come back up. I think we're used to services of all of the tech we use going out every once in a while, but it has to be fixed quickly in order for customers to have confidence. And even though they said the issue was mostly resolved earlier today, it took a long time for some of the services to come back online. Some services that people relied on, such as government services or Amtrak ticket booking or Venmo, these were all things that people don't really associate with Amazon during their day, but then weren't able to use them. It's interesting, comparing this to the CrowdStrike outage of last year. That was one where a lot of planes were grounded and people, couldn't use basic services. Anytime something that touches so much of our world goes down, it's a reminder of how really dependent the ecosystem is on a few big players.
And do we have a better sense of what caused this and what else can be done to prevent a similar occurrence?
I have a feeling we'll hear more from Amazon about that in the coming days, but so far they have said it's a database issue, an issue that cascaded through to having sort of a domino effect with the rest of their customers. Once there's something that's broken, everyone who pings that database has the broken response, and so then they all had the errors. So once they fixed the issue, it still took time for those other services to come back online. But I have a feeling if you're one of these customers who was down today, you are certainly calling up your cloud person at Amazon and saying, how are we going to make sure that this doesn't happen again? Or do I need to diversify my cloud business?
Sarah Fryer leads our big tech coverage there with the latest on the Amazon Web Services. Now, another technical issue that we're following on the corporate front, major Japanese retailers, including Muji owner Ryohin Keikaku, suspended their e-commerce sites after a cyber attack on a key supplier. The disruption stemmed from a ransomware attack on Sunday that crippled the systems of office supply seller Ascal. Its shares fell 5% on Monday. It's the second such incident to unsettle Japan's consumer market in less than a month. Apple shares hit their fourth record this year after Loop Capital upgraded the stock to buy from hold, citing positive iPhone demand trends. Shares rose around 4%, surpassing an all-time high that had stood since December. The recent strength comes amid signs a long-awaited iPhone upgrade cycle may be underway. We have more ahead on the Asia trade. This is Bloomberg. We're following Argentinian bonds because we saw the flip-flop on successive headlines coming from that deal on a currency swap line with the U.S. Treasury. So on Monday, we saw it rising on the announcement of the U.S. asset swap deal before giving back all of those gains. In fact, it's been really rocked by a lot of volatility. We've seen the same issue with the Argentinian peso as well, under extreme pressure and really back to that free fall despite a disagreement with the U.S. The currency also down down about 6% so far in October, more than 40% so far this year, the worst in emerging markets. But let's talk a little bit about that deal with the U.S. because the Central Bank of Argentina and the U.S. Treasury have signed a swap line of $20 billion, a move signaling a vote of confidence for President Javier Milei ahead of Sunday's crucial midterm elections. For more on this, let's bring in Bloomberg opinion columnist Juan Espineto. JP, so what I don't get about this deal, I understand why Argentina wants it, but the fact that President Trump and his administration is willing to come up with this package, what do they have to gain?
So I think this has to do with the geopolitical view dominating the White House right now. They see Latin America as the sphere of influence. They want to go back to have a more assertive politics to the region. And if you look around, you see the top 5 economies, 4 of them are being led by leftists. So the only like-minded ally is Javier Milei in Argentina. And Javier Milei has been having a great 2024, but it's all collapsing this year with this volatility in the market. I think that's the main reason why Donald Trump is so outspoken about helping Argentina and giving this swap, which is extraordinary, I have to say, as it's extraordinary to see the U.S. Treasury buying Argentine bonds. I'm from Argentina. All my life, I heard that we need to buy dollars. And here is the U.S. Treasury saying, I'm going to buy Argentine bonds as a show of support to the Argentine currency. It's something that, to be honest, most Argentines don't have right away these days.
And yet, JP, we are still waiting out for details of the deal. That still looks quite scarce at the moment.
Yes, exactly. We don't have the details of these. What we have is this statement from the Argentine Central Bank saying they signed the swap agreement. In theory, that means that you have the Argentine international reserves in dollars increased by $20 billion. This money is not going to be used right away, I guess. So we'll have to see how are the details on how the government could actually implement this use of resources, right? But as you said, we're not going to know, and I suspect we're not going to have these details before the election on Sunday, because probably Donald Trump wants to know exactly what is the political support of the government to the government of Javier Milei.
So how consequential is the Sunday election here in the broader scheme of things, especially when it comes to supporting Argentinian assets?
It's huge because it's a midterm election. Usually midterm elections aren't that consequential, but at the same time, it will show us how strong is this pitch that and policy that Javier Milei has implemented in Argentina in terms of austerity, right? If we have the ruling party, the ruling coalition doing more or less okay, probably assets will like that, because it shows that there is still popular support to this idea of austerity, right? But let's remember, Javier Milei started with a very weak government in Congress 2 years ago. So he's gonna see how his coalition increases the number of lawmakers in Congress on Sunday. The margin of how big are the gains are going to be the key to be watching on Monday.
And we'll watch that crucial electoral test. JP, thank you so much. Bloomberg opinion columnist Juan Espineto for us. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Japanese assets are setting up for the market opens in about half an hour. We had seen the yen holding at that 150 level against the U.S. dollar. Nikkei futures pointing to more upside after we saw the Nikkei gain already to very close to record highs. What we'll be watching also is JGBs, because they were under pressure after Bank of Japan board member Hajime Takata said that the central bank needs to be watchful of upside risks to prices and be ready to lift the rate. Perhaps something that could apply some pressure on the markets do watch out for Japanese retailers because we saw a supplier of those retailers getting a cyber attack. So the likes of Yohin Keikaku, The Loft, and Sogo & Seibu, for example, had been suspending some of their e-commerce sites. But all to do really in the broader markets with what's happening on the political landscape. The Liberal Democratic Party finalizing a new coalition deal with Japan Innovation Party. Let's get more with Sheila Smith, a senior fellow for Asia Pacific Studies at the Council on Foreign Relations. Sheila, always good to have you with us. So I guess this really sets the motion forward for Sanae Takaichi to become the first female prime minister of Japan. But I do wonder how long we're expecting this cooperation and collaboration between Ishin and the LDP to last.
Well, thank you, Shery. Thank you for having me. It's fun to be with you always. You know, I don't know, and that's the difficult thing as a Japan politics expert to say at the moment. You know, Japan is really pretty stable in its politics. We don't often have moments of unpredictability, but I'll say the last 3 weeks has been quite exciting for those of us who watch. Takaichi Sanae is going to be the first female prime minister of Japan, as we anticipate tomorrow. Her coalition partner, the Ishin no Kai, or the Innovation Party, as you introduced them, are an Osaka-based or a Kansai-based reformist-oriented party, but share a lot of the LDP's views on defense, on security, on foreign policy. Where they differ a little bit, and to answer your question about how long this coalition will last, is really on the economic picture that they want to see for Japan. So it'll be difficult, I think. I think she'll get her vote as prime minister, but managing this coalition and this new coalition partner will be a little bit tricky.
What are some of those economic measures that they differ on, and what does that mean for major government policy measures coming forward?
Well, I think they've basically decided that they want to address the Japanese voters' concerns about inflation. So in short-term measures, things like reducing the gasoline tax, reducing some of the burden on households that are struggling with subsidies from the national government. These are all things that in the short run will be easy to do. What will be difficult is trying to find common ground on their policies to address inflation writ large. That is not an area that you saw explored in the coalition document that was announced today in Tokyo. But I think you're going to watch them walking forward gently together to figure out whether or not they really do share some longer term economic outlook, sort of targets for economic priorities. Takaichi is what's referred to as a fiscal dove. She's very much in the line of former Prime Minister Abe Shinzo. She wants structural reforms, but she really also appreciates the idea that the Japanese government can continue to help boost the economy. So expect her to not be very sharp in the way she addresses government debt. I think she's going to have to think about the long-term access to resources that any kind of real serious structural reform will need. And again, Ishin, the Innovation Party, wants social security reform. They want other kinds of reform, power sharing a little bit on economic development between Osaka and Tokyo. These are large structural reforms. And I think for the moment, they're very much focused on the short run. The next government budget will be a real telltale sign about how this coalition is going to work.
And also on reform, it's about what the LDP might be pushing for, political funding reform. What is your sense of the extent in which Ishin might be able to exert some influence in this arena?
It's a great question. You know, the LDP has lost voters in both the lower house and the upper house elections over the last year, largely because of this question of transparency over money in politics and the resistance or the perception of resistance by the LDP to true transparency. All of the opposition parties, including the Innovation Party, have asked for an end to organizations and corporations giving undisclosed amounts of money to political parties. And transparency is key here. The political party that left the coalition with the LDP, the long-standing junior partner of the LDP, the Komeito, really wanted this kind of transparency in the relationship between politics and money. And Takaichi said no. And that was the issue that broke the coalition, the 26-year coalition between the LDP and Komeito. Ishin also wanted transparency, especially for those corporate donations. but she didn't offer it, and it wasn't in the document. So they have backed away from pushing hard on that piece of their agenda.
What about defense priorities on the two sides? How aligned are they?
Well, the interesting thing about the document that you saw that came out on Monday, Tokyo time, was that they acknowledged the need to defend the Japanese people, that they noted that they were both forward-leaning in a sense on reforming Japanese security policy, thinking about a stronger Japanese role in its defenses, along with a strong U.S.-Japan alliance. So I think on the defense and security side, especially the U.S.-Japan alliance side, you'll find that Ishin and LDP don't have a lot of differences among them. What's harder to know about the Innovation Party is they've never actually held power. So once they get into power and have to deal with the details, you might see some differences emerge.
Which will really play well with President Trump, right? We are expecting that meeting now with potentially Takaichi next week. Just quickly, how good do you expect the rapport to be between the two? Because that's so important for President Trump.
It is indeed. And so you saw the president on Truth Social when he thought that the LDP leader had been elected and would become the next prime minister. You saw a very positive tweet by the president. I think the visit by President Trump, which hasn't been announced yet by the White House, but is expected soon, to Tokyo on his way to Seoul in the APEC meeting, I think you'll see there the Japanese government will be rolling out the red carpet to demonstrate the strength of the alliance and the partnership. It'll be a very comfortable place for Takaichi Sanai as prime minister to introduce herself to President Trump.
Sheila, great to get your insights. Thanks so much. Sheila Smith is Senior Fellow for Asia-Pacific Studies at the Council on Foreign Relations. Now, in terms of geopolitics, we, of course, have been seeing rare earths in the spotlight, and we have heard how Arafura is getting conditional approval from the Australian government for an equity investment of up to $100 million. So some cooperation there between government and private sector in terms of rare earths investments. You're seeing their stock surge almost 17% there. BHP also in the green in trade. More ahead on the Asia trade. This is Bloomberg. Welcome back. You're watching the Asia trade. Now, public markets continue to climb, driven by factors such as AI optimism and momentum around central bank rate cuts, despite geopolitical tensions threading through the year. And there's been talk of a slowdown in private markets meantime, but Hamilton Lane says the sector remains resilient, with strong opportunities still emerging for investors. The firm is one of the world's largest private markets investment managers, overseeing nearly $1 trillion in assets. Joining us now from our Sydney studio is Juan Delgado-Moreira, co-CEO of Hamilton Lane. Juan, good to see you. So we are seeing some concerns on private markets, especially given the pair of blow-ups not so long ago in private credit. Just like your thoughts first, I wonder if you could weigh in on what you see in your read in that situation in terms of the risk before we talk about the opportunities.
Sure, thank you for having me. That's fair enough. Private markets on the credit side, so private credit has been one of the best performing strategies for the last few years. So you have to have that as backdrop. And then you've seen effectively commentary around systemic risk, which we don't believe has been the case. The write-off ratio has increased a little bit, and a lot of the ultimately the due diligence and the underwriting has been resilient and robust. If you take a step back and look at the overall asset class that has been deployed over the last few years.
So do you expect to perhaps see more of this, and how much is there a risk for positioning overall in private markets?
Look, I think on the bigger picture question connected to the private credit discussion is this the canary in the coal mine? Is this signaling a potential turn in the cycle? Is it signaling worse to come for the overall public and private equity side of the markets. And our view is that's just not the case. There's been specific events in portfolios where the investors are by and large long-term, long-dated investors, not depositors, institutional, where their return comes from fund pools. And then if you go back and look at the equity side, we're seeing EBITDA growth, we're seeing revenue growth at a double-digit basis. And you have an environment where you began to see over the last few months quite an active exit and liquidity environment. So contrary to that being a leading indicator, we feel that the equity market and the private side is telling you that the growth is there and the liquidity that everyone's been hoping for so long is coming through.
So you're not seeing those concerns dampening some of that sentiment when it comes to private equity. And where are you seeing the growth opportunities at this point if you're not necessarily seeing those concerns actually really dampen the deals that you can expect to see in the sector?
Well, part of the question around concern is as if we run the risk of perceiving or discussing this as if it's the first time private equity or private credit faces a cycle. And that is important to highlight. It is not. And although it has grown significantly, it was highly active in the pre-GFC and went through that cycle. And so when you compare the data of today's companies versus companies in prior moments on cycles, you have less leverage, as I said, more fundamental growth, much more of a mid-market story that you're seeing in the public markets. And so that would be one of the answers to where is the opportunity. Institutional investors need to diversify away from the large cap public equity connected to the tech and the AI trade. And I think you're getting a lot of that in private markets. That's a very good opportunity. And again, you've seen private credit not to be underestimated. We've just gone through the last 2.5, 3 years where we had double digits for direct lending in private markets with very, very low rates. And those returns have been pocketed, by the way. So we would say equity, mid-cap equity, secondaries, infrastructure, strong areas of private markets opportunity.
And you're seeing that activity being as diverse here across Asia as it is in the U.S.?
No, of course. You have, and as you know, as you mentioned, I think in the intro, I'm based in Hong Kong, been here for 15 years. And Hamilton Lane has a big practice in Asia. It's a big area with 6 offices. So the opportunity is different in the shape and nature. And that is actually, I say that as a positive, very much smaller on the private credit side was your opening question. So not even a blip relative to the overall size of the private markets in Asia, but much more of a growth story, much more consumer, domestic oriented, much more diversified by geography, and in a number of very interesting secular growth sectors. So we're very bullish on the Asia private equity opportunity. But of course, it's been growing, but it's smaller than the US, which after all represents close to 70% of the private equity market.
Juan, in terms of sectors, how much is AI dominating the deal flow?
Not as much. In the private market side, I should highlight private markets provides a very interesting and attractive entry point to AI, by the way, which is something somewhat overlooked. But it is one of these sectors, as I said earlier, if you're doing mid-market, and by mid-market I mean enterprise values below, let's just say $3 billion, you're able to invest in healthcare, in healthcare distribution, in business services, in industrials, which are not as geared to the AI, while you are also using venture capital, which, by the way, thrives in Australia and in Southeast Asia and in the region, and in India, of course, using that to get exposure to earlier stage AI plays and the AI application economy, which is going to be massive as well in Asia, of course.
Yeah, to your point, it's also a lot to do with greater access. Talk to us about how that is affecting Hamilton Lane's growth strategy in terms of perhaps the markets that you're focusing on with the legal, the banking structures to support these.
Well, so the services part is one of the sectors that you invest in private markets. But maybe an element of your question is our growth and the commentary of the development of private markets has been really an access play for a number of participants that were not prior to the recent few years had been able to invest in private markets. And you see that also on the AI pickup. A lot of the AI development is really held in private companies. And so you cannot get access to it directly to the public markets. All of that, I think, is bringing tremendous pull, tremendous attraction and interest in how do I get access to private markets. And as you know, Hamilton Lane has been at the forefront of developing evergreen funds and other means where the consumer, where the investor can get access to AI and many other of the drivers of private markets. Again, healthcare has been a big beneficiary, business services, and other, not just professional services, including industrials. We haven't mentioned data centers on the more real estate or infrastructure side. A big chunk of that capital is actually private markets funded. It's not funded by the public markets, both on the equity or the credit side.
Juan Delgado-Moreira, really good to have you with us, co-CEO at Hamilton Lane.
Anytime.
And it's time now for morning calls ahead of the Asia trading day. Morgan Stanley's Michael Wilson says the equity markets still face unresolved risks from trade tensions and slowing earnings revisions, which should keep investors cautious in the near term. He notes that the S&P 500 has yet to recoup losses triggered by an escalation in U.S.-China tensions earlier this month. At the same time, upward earnings revisions are slowing just as the reporting season gets into full swing. Adding to the jitters are signs of strain in credit markets following loan blowups at two regional lenders. And speaking of that, strategists at Bank of America say further signs of strain in the credit market risk provoking a broad equities rout. Long-only investors, including pension funds, may be compelled to sell to avoid punitive private asset marks and to meet ongoing obligations. This is because passive investment dominates the S&P 500, so a downturn would force index-tracking funds to sell equities. We have more ahead on the Asia trade. This is Bloomberg.
Here are some of the stories we're following. The U.S. is weighing tariffs of up to 100% on all imports from Nicaragua. The U.S. Trade Office says Nicaragua's labor and human rights abuses, along with the dismantling of the rule of law, amount to a burden on U.S. commerce. The universal tariff, which could be applied at a lower rate, is one of 4 actions the U.S. may take in response. President Trump says the U.S. will destroy Hamas if the militant group fails to honor the ceasefire with Israel. Trump says this doesn't mean he would send American troops into Gaza and that he would ask Israel to take care of it. The president's comments come after a series of alleged Hamas ambushes and Israeli airstrikes, with each side accusing the other of breaching the peace agreement. A U.S. appeals court is allowing for now Trump's plan to send troops to Portland to counter protests against his immigration crackdown. A divided court in San Francisco lifted the order blocking deployment of 200 Oregon National Guard members to the liberal-leaning city. Trump has claimed without evidence that Portland is burning to the ground and being overrun by insurrectionists. Shery.
Here in South Korea, the 14 million retail investors in the country are piling into risky assets as they try to build enough wealth to buy a home. The intensity of this activity has turned the country's so-called ants into an influential political force. Let's bring in Bloomberg Asia credit reporter Haram Lim. And Haram, of course, we know how difficult it is to buy a house here in South Korea, but how much bolder are these ant investors getting? And could there be some risk around this type of investing?
Right. So the price of apartments in Korea, and especially in Seoul metropolitan area, is rising to unprecedented levels. And it is extremely hard for these people to just afford a house by their salaries and by their earnings. So this is in a way triggering more and more, especially younger generation people, to do more riskier bets in their investing.
Haram, what else do these so-called ants investors tell us about broader trends?
They are seeing it is basically a change of psychology here, because these ants before in like 1960s to 1990s, they could see an opportunity to really increase their wealth by buying a house. Nowadays they are just seeing this simply impossible. So they are finding like other more risky bets, even in crypto, like even if they're investing in crypto, they would go for a little bit more riskier ones like altcoin. If they're doing investment in U.S. stocks, they would be more inclined to do more leverage and more complex financial like ETFs, so they could actually get more out of their investment.
But that's the point, right? I mean, this not only gets risky for these investors that could lose their life savings, but could it also pose a systemic risk if you have so many retail investors in the Korean market?
Right. So one of the interviewees we talked to said he basically puts all of his earnings in his crypto account. He just tries to put everything he earns into this single portfolio he has. So, well, this might work good in an upswing market, but what if the market goes down? This will really have big implications for the society as a whole. Firstly, to start with their personal savings, personal spending, and the banks will have less capital access. And it could really create like a bubble in the Korean society that could have negative implications. And regulators are very worried about this as well.
Yeah, we already have the Kospi at record highs. Hiram Lim, good to have you with us. Bloomberg Asia credit reporter with, of course, the risky bets by retail investors here in South Korea. And as we head towards the market opens here in Korea and Japan as well, take a look at these stocks that we'll keep an eye on. Apple supplier shares could be rising after the U.S. tech firm stock climbed to a record high amid continued signs of strong demand for its latest generation of iPhones. Apple rose 3.9% to its first record of 2025 after Loop Capital upgraded the stock to buy from hold.
Shery, we're also watching critical minerals and rare earths related stocks after the U.S. and Australia signed a minerals agreement. Overall, those stocks are doing pretty well. Watching also in Japan, the expectation of an election of the Prime Minister later today. Nikkei futures pointing to that upside. We'll watch the markets open next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after another record high on U.S. stocks. Of course, we saw the optimism around trade talks across the world and the U.S.-China negotiations that we're expecting between President Trump and President Xi Jinping. That's expected to include Taiwan, according to President Trump. And we're also watching those rare earth miners, April, given, of course, the agreement with Australia on developing the sector.
Absolutely. To your point about how stocks continue climbing, of course, we've been seeing those records in Asia in the past session, but for the U.S., it's also about earnings delivery and how these majority of companies that have reported on the S&P 500 continue to beat in terms of profit estimates, Shery.
Take a look at how Japan is coming online because we're very close to a record high ahead of the parliamentary vote. We finally have the Liberal Democratic Party finalizing that new coalition deal with Japan Innovation Party. So this afternoon, we are expecting Sanae Takaichi to become the first female Japanese prime minister. And this as we're getting news from local media, FNN, saying that Takaichi will name Satsuki Katayama, a former regional revitalization minister, as a finance minister. So we'll be watching, of course, all of the latest political developments in Japan, as we're also keeping an eye on JGBs after they dropped in the previous session. A Bank of Japan board member talking about the country being ready to lift rates. We're also getting the latest numbers from South Korea when it comes to exports. For the first 20 days of this month is a fall of 7.8% year on year. Perhaps not surprising given that, of course, we had the Chuseok autumn holidays here in the country that took out some of those working days. We also had the import numbers also falling 2.3% for the first 20 days of this month. And we keep an eye on trade negotiations between South Korea and the United States as well, April, as we're hearing about more progress that's been happening ahead of the APEC summit in Gyeongju next week.
Indeed, and in terms of data, also watching out to later in the week, the U.S. CPI numbers. How much of a downside risk might this prove for U.S. bonds? For the moment, in terms of U.S. Treasuries, we're still seeing the 10-year yield holding below the 4% handle. And as Treasuries climb, along with stocks, gold also continued its upward momentum. And this is following on, of course, from the Friday sell-off. But what investors seem to have been taking the opportunity to do, despite the improving risk outlook, is to buy more bullion. So we've been talking about this everything rally. U.S. futures on the S&P 500 not really giving us that much direction. We are also seeing Brent prices continue coming under pressure. There is sign that the crude surplus that we've been warned about, we're seeing further elements of that for the moment. On top of that, also coming under pressure amid the U.S.-China trade tensions easing, Shery.
Yeah, let's bring in Dayeon home to discuss all of this. Multi-asset portfolio manager at Shinhan Asset Management. Dayeon, really good to see you in the Seoul studio. Avril just mentioned the ongoing U.S.-China negotiations. Of course, we do have the U.S.-South Korea trade negotiations as well at a time when the Kospi is on a tear. We're talking about 60% gains this year. Could some of the fallout from the trade negotiations be a risk when we're this high already?
I think it really comes down to implications in the FX market. As a global investor, you have to think about not just equity gains, but also your returns from FX. But any fallout from the trade negotiations next week would have a huge implication in dollar won. We're talking about $350 billion investment deal between U.S., right? And I think I'll be looking out for two things. One is how much of that will be pure cash investment, and two is, within what kind of time horizon. Let's say it's 10 years, but 35 billion, so divide by 10 and 35 billion each year, would still mean, if it's a pure cash investment, would still be quite significant in the FX market. I believe the BOK advised the government the amount that would have limited impact in the FX market on an annual basis would be between 15 to 20 billion. So anything beyond that, I think the FX market will move.
Yeah, and of course that will have implications for the Korean stock market, but also for the Bank of Korea. I mean, if you do have more pressure on the Korean won, which is already past 1,400, how much more difficult does it become for the BOK, which is, of course, deciding on policy this week?
I don't see any more rate cuts from the BOK this year. Maybe they can resume next year, but three things. First, as you mentioned, there are risks of Korean won depreciating further. Second is appointment prices in Seoul metropolitan area continue to rise. The last figure that I've seen was 20% increase on an annualized basis for the apartment prices in Seoul area. That's a huge increase, and I think the BOK will be more focused on the stabilization of that instead of boosting the economy. And the growth, in fact, is buoyed by the semiconductor segment, and it doesn't look too bad. Even if there's some downside impact from the tariffs, I think the exports in the semiconductor sector will really offset some of that downside risks.
Dayeon, how do you feel about Korea versus U.S. bonds, given what you've just outlined, and in duration in particular?
We are actually underweight Korean bonds, and I prefer to be positioned in U.S. rather than Korea. First, I think for Korea, we can see from two fronts, monetary and fiscal. Monetary, I've just mentioned, I don't really see any further easing from the BOK this year. And on the fiscal side, we really expect additional government initiative to really boost the economy. For example, the National Growth Fund is expected to be 150 trillion won in size. And even if the KTB issuance does not increase as much next year, there'll be some other bond issuances, such as Korea Development Bank bond issuances, to fund such programs. So there's both on the monetary and fiscal side, I don't really see Korean bonds as attractive. Now, on the U.S. Treasuries, we've had period without any much of the economic data coming out from U.S. because of the shutdowns. We will be looking out for the CPI data that comes out this Friday, and we'll be examining how much of the tariff is really impacting the inflation. But I think the real worry in the U.S. is the deterioration in the labor market. And so if we continue to that signal, I think treasuries can rally. And so we prefer to overweight U.S. treasuries over Korean bonds.
And how helpful might that be for other EM bonds, not Korea's, perhaps, given how that might fuel further Fed rate cuts?
Yeah, I think as the Fed goes further deeper into its easing cycle, I think there are more room for EM central banks to ease. And to me, the weak dollar story is still not yet over. And so I think the EM local bonds look quite attractive in that sense. And carry, if you take the FX volatility into account, the real yields that EM bonds are offering is quite attractive. And so we like EM local currency bonds, and we continue to see a strong inflows into EM local bond funds, not just tactical flows, but some of the anecdotal evidence is showing that some structural inflows are coming from dollar-based investors to diversify their portfolio away from traditional dollar-based fixed income assets.
Dayeon, really good to have you in studio again here in Seoul, multi-asset portfolio manager at Shinhan Asset Management. We're following some of those suppliers of Apple. Of course, we have seen the company hit its first record high of 2025. Loop Capital upgrading the stock to buy, the latest firm to cite positive iPhone demand trends. And of course, that will have implications for all of those Asian suppliers. This is Bloomberg. President Trump has listed rare earths, fentanyl, soybeans, and Taiwan as the top U.S. issues with China ahead of his meeting next week with Xi Jinping. Trump says he believes a trade deal with Beijing is possible.
I expect we'll probably work out a very fair deal with President Xi of China. So most of you will be with us. It's going to be very exciting. And I think we're going to work out something that's good for both countries.
Let's bring in Bloomberg Managing Editor Jill Deasy's. And Jill, of course, anything to do with Taiwan will have implications for regional security. Is President Trump willing to getting some trade concessions from China and playing Taiwan as a card?
Well, Shery, I wouldn't really go that far. I think in the context of how you saw this come up when Trump was asked about it, is he was kind of asked about it, and he was not particularly, he was kind of vague on, where Taiwan sort of enters the equation. I mean, really just saying that he expects Taiwan to come up in discussions isn't particularly surprising. I think if you're Xi Jinping, China, you have an opportunity to talk to the president of the United States. Of course, you want to bring up the issue of Taiwan. I mean, this is one of the most important things for Beijing to really kind of focus on when it comes to their own sort of national security interests here. Whether that actually enters into the equation, Taiwan, I mean, as a bargaining chip, I think is, I think we're pretty far from really being able to say that. But when you're looking at some of the other things that Trump is really bringing up here as concerns that the United States has, it tries to organize some kind of a trade agreement. I think those are much more interesting from more of an actionable standpoint. I mean, the fentanyl issue, maybe that's something that the Trump administration can kind of reach some kind of an agreement with China on. But where I think things really kind of get into murkier territory is particularly when it comes to rare earths. I mean, this is really, I think, China's biggest negotiation tactic here, just because of how much control they have over these really, critical substances, these rare earths that, factor in everything from fighter jets to electric vehicles. And so that's really, again, that major bargaining chip that Xi Jinping has going into these negotiations, and whether Trump is able to actually move the needle there and reach some kind of an agreement based on rare earths alone. That's going to be, I think, really, really interesting as we head toward these talks.
Jill, that being said, we are also seeing the Trump administration wielding tariffs as a tool to push the U.S. agenda for the likes of Nicaragua. What do we know about that?
Yeah, that's one where it seems like the Trump administration is weighing some kind of tariff on Nicaragua, citing human rights violations in particular. This is an interesting one, if only just because we haven't heard Donald Trump himself talk that much about Nicaragua. But we have heard some members of his own administration sort of lump in Nicaragua with some other nations that they've been particularly critical about over the course of this year. I'm thinking Cuba, Venezuela as well. So this is one where, I think you're kind of seeing that idea of using, tariffs as some kind of a cudgel when it comes to sort of punishing some of these nations. You're seeing on your screen right now the idea of tariffs of up to 100%, citing some of those issues that we've been discussing. So again, this is one that I think, we'll kind of see how this develops, but it would, it reminds me of some tactics that the U.S. has used when it comes to either tariffing or sanctioning some other nations.
Yeah, tariffs as a tool indeed. Jill, thank you so much. Bloomberg Managing Editor Jill Deeses for us there. Meantime, Australia and the U.S. have signed an agreement aimed at boosting critical mineral supply. And this deal came after Prime Minister Anthony Albanese had his first meeting with President Trump, which also secured crucial U.S. commitments to the AUKUS Defense Pact.
On defence, we've already had a discussion about taking it to the next level. Our defence and security partnership with AUKUS is so important. Today's agreement on critical minerals and rare earths is just taking it to the next level.
Bloomberg's Paul Allen joins us now with more. Paul, let's start with the critical minerals agreement. What are the details?
Yeah, a lot of speculation that this would happen, and now we've finally got those details. So it's $1 billion investment over just the first 6 months, but building to an $8.5 billion pipeline of projects between the US and Australia. Some of these already have financial commitments, but the two that were dealt with today, there's a gallium project in Western Australia that will have backing from the Pentagon, as well as Japan aims to supply 10% of global gallium supply, and this is a mineral used in semiconductors. The other is in the Northern Territory in Australia, the Arafura Nolans project. This is the mining and processing of neodymium and praseodymium. These are used in those specialized magnets that we often talk about in electric vehicles and renewable energy as well. And you can see the impact on Arafura's share price just today, up about 16%. That's off session highs, but well done. If you bought this stock at the start of the year, it's up 400%, although coming off a very low base. President Trump, meanwhile, saying in 1 year we're going to have so much critical minerals we won't know what to do with them. Look, I guess we'll see, but that rhetoric certainly underscores the intent here.
President Trump also reaffirming support for the AUKUS Defense Pact. What exactly did he say?
Yeah, this would have come as a huge relief for Anthony Albanese, and you heard the Prime Minister referencing it there, because Australia has already made substantial down payments on this defence pact to support not only shipbuilding capacity in Australia, but also the United States. There is a review underway in the United States over this, but we heard from the US Secretary of Navy saying, look, this is just to clarify some ambiguities. But then the President himself emerged as a very enthusiastic supporter of the pact, saying it's full steam ahead, and he also also praised the investments made by Australia so far. So really this trip very successful for the Prime Minister Anthony Albanese. Took months in the making. President Trump hailing him as a great Prime Minister and saying with Australia it's been no games, unlike with other countries he's had to deal with.
A veiled reference to, I guess we know who, Paul. Thank you so much, Paul Allen in Sydney. And you can hear more about Australia's economy in the coming hours when Treasurer Jim Chalmers joins Insight with Haslinda Amin live at 11:30 a.m. in Hong Kong. That's 2:30 p.m. in Sydney. And later this hour, analysis of Australia's critical minerals deal with the US when the University of Sydney joins us to unpack the outlook for relations between Washington and Canberra.
And take a look at how Japanese assets are trading at the moment. The Nikkei giving back some of its earlier gains. We were up by more than 1%, but we're still at around record highs. We're talking about most of the sectors in the green right now. Utilities just under a little bit of pressure. We're watching JGBs closely as we saw those losses after the Bank of Japan board member Hajime Takata talked about raising rates. The Japanese yen still holding steady at that 150 level against the US dollar as we're getting some more headlines when it comes to the composition of Japan's new cabinet. We are expecting this afternoon the parliamentary vote to get Sanae Takaichi as the first female prime minister of Japan after the ruling Liberal Democratic Party finalized that new coalition deal with Japan Innovation Party. So the former Prime Minister Ishiba's cabinet now resigning en masse, according to Kyodo. Let's bring in Bloomberg economics and government reporter Yoshiaki Nohara for the latest on what's happening on the political landscape today, Yoshi. So what are we expecting?
So as I mentioned, that we are expected to have the Sanae Takaichi as voted as the first female prime minister for the nation, and at the same time, she's going to name and form the cabinet members immediately. And one of the key points the market is looking for is who is going to be the finance minister. And we're seeing the local media reporting that Satsuki Katayama is likely to be named for that position, and she's going to be the first female person to hold that position if it becomes true.
We're also seeing these markets reacting on the expectations of what her policies will look like. The Nikkei hitting a fresh record yesterday.
Right. So, Abreu, that's clearly part of the market's expectations for what Takaichi may do as a prime minister, as it became clear that she's going to get enough votes to be a prime minister. But here, remember that she's facing a really big challenges, not only inflation, but also some tensions with on the diplomatic front. And her immediate task is that how she's going to form the fresh economic measures without compromising the efforts for fiscal concerns. And that's going to be a first challenge for her.
Not just that, because we do have that expected meeting with President Trump next week as well, right? And we know that personal rapport is so important for President Trump. How are we expecting Takaichi to perform?
Well, that is right. The first meeting is going to be important to make the kind of the good impression, to make chemistry with the president. And I think she knows well that it's important, given that she's been being inspired by her mentor Shinzo Abe, who had a really good close tie with President Trump. So she's well aware of that, and the message she's going to likely to put forward is that the continuity of the partnership and strengthen the relationship on the many fronts, including national security.
On continuity, I guess what we're watching out for is also, in terms of the partnership between the LDP and Ishin, whether there's going to be coalition stability. What are you watching out for next?
Well, that is a difficult thing to say at the moment, but people are paying attention whether this is going to be a really long-standing, permanent sort of, stable partnership, or, there's going to be more tensions down the road, given that they didn't reach quick agreements on some thorny issues like political funding reforms. So that needs to be monitored going forward. And I think Ishi knows well that they have to make sure that the LDP is following what they promised to do, but at the same time, they don't want to be seen as hitting brakes on everything on what the LDP is trying to do.
We'll continue watching for developments on that front. For the moment, at least, given that agreement, at least moving a bit of the political uncertainty out of the way. Bloomberg economics and government reporter Yoshiaki Nohara for us there. Thank you so much. We'll have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade. Here are some of the stories that we're following at the moment. President Trump says the U.S. will destroy Hamas if the militant group fails to honor the ceasefire with Israel. Trump says this doesn't mean he would send American troops into Gaza and that he would ask Israel to take care of it. The president's comments come after a series of alleged Hamas ambushes and Israeli airstrikes, with each side accusing the other of breaching the peace agreement. A U.S. appeals court is allowing, for now, Trump's plan to send troops to Portland to counter protests against his immigration crackdown. A divided court in San Francisco lifted the order blocking deployment of 200 Oregon National Guard members to the liberal-leaning city. Trump has claimed without evidence that Portland is burning to the ground and being overrun by insurrectionists. Take a look at how European futures are trading after stocks rebounded in the previous session. Of course, more optimism about U.S.-China trade negotiations have led to some more upside when it comes to sentiment across markets. But we also saw the French CAC 40 closing higher, with gains in the luxury sector outweighing a plunge in shares of BNP Paribas. We had Kering jumping after agreeing to sell its beauty division to L'Oreal. Avro?
Yeah, Shery, despite how well stocks have been doing, let's get to some of the morning calls we're following today also, because Morgan Stanley's Michael Wilson says stock markets still face unresolved risks from trade tensions and slowing earnings revisions, which should keep investors cautious in the near term. He notes that the S&P 500 has yet to recoup losses triggered by an escalation in tensions earlier this month. At the same time, upward earnings revisions are slowing just as the reporting season gets into full swing, adding to the jitters, signs of strain in the credit markets following loan blow-ups at two regional lenders. And speaking of, strategists at Bank of America say further signs of strain in the credit market risk provoking a broad equities rout. So that's another thing that we're going to be keeping an eye on. Long-only investors, including pension funds, may be compelled to sell. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Now, foreign property buyers have invested close to $140 billion into Chinese real estate over the past 15 years. But an unprecedented glut is causing rents to fall and property values to tumble. Many of those investors are now looking to sell their properties at steep losses. Asia investing and finance editor Russell Ward joins us from Tokyo for more on today's Bloomberg Big Take. Russell, I guess it took a while to kind of rake through the losses for some of these companies because of the commercial real estate slump in China. So we know it's bad, but how bad is it?
Morning, Avril. Yes, I mean, in China, obviously the housing meltdown there has been well documented, but perhaps what is slightly less known is the slump in the commercial real estate market that has sort of happened in tandem with this housing debacle. We've seen a sort of similar boom and bust cycle there. And so really what we've been seeing is that there's been a huge glut in properties ranging from offices to warehouses to shopping malls and hotels, and global investors during the boom times, as you mentioned, they pumped in $140 billion investing in these properties during the good times, and now the bad times are turning out to be quite prolonged. So that's leaving these global investors with the sort of dilemma of whether they hang on to these assets or realize these losses and sort of try to move on from there. So that's affecting, some of the biggest global investors, the likes of BlackRock, and also banks, on the other side of these deals. A lot of these assets are collateral for loans, and so the value of this collateral is also falling. So it's also, hurting the banks as well.
You mentioned some of those assets, whether it's logistics or offices. Are there any particular sectors that are most hit than others?
Yeah, I think the office sector is the decline in the office sector is one that's pretty stunning, really. We've had the office market worldwide slump in the wake of the pandemic with the work from home trend. But it's actually kind of surprising to note that in China, the office market vacancies there are among the highest in the world. Even in Shanghai, that's a world global financial business hub, we're seeing vacancies there of more than 20%. So, there's been just this huge supply glut, and that's going to take years to work through in the office sector. So, we're seeing some pretty distressed sales in that area in particular.
And Russell, what are some of the examples of big investors getting stuck?
Yeah, one surprising example that's mentioned in the story concerns Oaktree. So Oaktree, is a global specialist in distressed investing. And so back in the early phase of the housing meltdown, Oaktree extended a loan to China Evergrande, of course. Evergrande being the sort of the poster child for that meltdown. And so the company defaulted on that, and Oaktree was saddled with this huge sprawling complex of unfinished apartments and unfinished or a hotel complex as well. And so it sort of found itself unable to sell this. It's holding on to these assets, and it's found itself sort of in the construction business, trying to complete these apartments and run the hotels on the property that and not really seeing that many tourists come in. So, at the moment, Oaktree is trying to run this, and we'll have to see what happens on that front. There's another one, was a BlackRock defaulted on a property loan in Shanghai, and the properties were sold for less than the loan amount, which also hurt the banks involved, which included Standard Chartered. A third example was Carlyle selling Shanghai office tower that it sold after even renovating the property. It sold at a loss. So, these cases are coming through, and we expect more to come.
Bloomberg's Russell Ward there with the latest on China. And take a look at how Chinese futures traded, because we had seen the yuan strengthening both onshore and offshore, with the third quarter economic growth data in China slightly beating estimates. And you can see A50 futures finished to the upside of 0.4%. We have seen the MSCI China index, for example, on a tear, rallying about 30% this year already as we head towards the fourth plenum, which, of course, will be the biggest political meeting this year, delivering perhaps some more stimulus measures for the economy. We're watching Chinese shares of rare earths as well, because we have that agreement between Australia and the United States on developing these critical minerals. But an interesting phenomenon that we're seeing in China, investors shifting toward defensive dividend stocks. This, of course, on the ongoing trade tensions between China and the U.S. that's fueling market uncertainties. Momentum began to turn earlier this month after President Trump floated additional 100% tariffs on China. Let's bring in Bloomberg Asia equities reporter Winnie Su. Winnie, so what's the latest on these dividend trades?
Yeah, Shery, actually, like you mentioned, it's quite an interesting shift in terms of how investors are positioning. Earlier, it's growth stocks, and now we're really seeing more preference for the defensive stocks. And when you actually look at how the indexes are performing, we are seeing that the CSI 300 dividend index outperforming last week against the overall benchmark by the most in 4 years. So that's really showing you how investors are kind of hedging for their risks. Yes, we talked about how the U.S.-China tensions are escalating or a bit de-escalating these days when Trump said that, he sees the 100% tariff as unsustainable. But it's just more actions between U.S. and China. And also, when you think about this timing, right, we've had a really nice tech run, a tech rally so far this year. So it makes sense to take some profit off this rally, especially as we head into the earnings season. And also, we are in the middle of that fourth plenum. So investors are also just waiting for potentially more stimulus to come. And now we are waiting for these meetings to happen between U.S. and China officials. So overall, the volatility is still high, and hence we are seeing a lot of hedging for the risks here.
I guess partially for investors also is the specter that U.S.-China tensions could always resurge again. So what are you seeing in terms of the likelihood that this rotation will continue?
Yeah, so far, yes, like you mentioned, Avril, we are expecting that any further escalation of these U.S.-China tensions will likely continue to prompt investors to shift into defensive stocks, and that's according to Nomura's recent note just coming out this past weekend. They say that they are seeing both sides diffusing these tensions a bit, but volatility remains very high. And also, from a seasonal trend, we actually see that defensive stocks are usually preferred towards the year end. So just from a technical perspective, that's also likely to continue. And from a flow perspective, interestingly, we are seeing that these brokerage-themed ETFs are actually seeing acceleration when it comes to the inflows, while the more tech or risk-related ETFs seeing a bit more outflow picking up in August. So that's really showing you how this sentiment has continued to develop.
Does that mean that we could see the broader rally in Chinese equities actually stalling now?
Yes, Shery, and actually that's kind of what we've been seeing lately. Yes, we had kind of a nice rebound yesterday, but that's also coming off quite a big sell-off on Friday. So volatility remains, and when we spoke to Morgan Stanley, they also mentioned that they do not actually recommend buying the dip of Chinese stocks yet, and that they actually do not also recommend having this chasing the risk on rally at this point, and that they prefer A-shares over H-shares if this tension is likely to go beyond November. And similarly, like we mentioned just now, Nomura actually said that they see this U.S.-China tension still be that big overhang when it comes to the Hong Kong Chinese stocks. But they do see an attractive entry point if MSCI China's forward PE ratio actually comes down to 11 times or so. And now it's about 12 times. So might see a bit of more correction at this point until things settle a bit around end of October when we have that APEC summit.
Yeah, something to watch. Winnie, thank you so much. Bloomberg Asia Equities reporter Winnie Su for us now. Talking about shifts in market trends or perhaps strategies, let's talk JGBs as well. Global bond traders from New York to Singapore have been attracted and burned by a trade known in Japan as the Widowmaker. Senior FX and rates reporter Ruth Carson joins us now for more. So talk to us about this Widowmaker trade and why investors are spilling into it or piling into it.
It's called the Widowmaker trade for a reason. For the past 3 decades, it's basically claimed numerous traders' scalps in the sense that they've been burned when they have shorted JGBs. And essentially that is the trade, shorting Japanese government bonds on the hope that an expectation that yields would rise. Now, this year, it's actually provided a windfall. Our analysis shows that Japanese government bonds have actually fallen about 4% this year on aggregate, and that is the worst among 40-odd bond markets across the world. So why is that happening? We know that politics is a big part here as to why JGBs are so volatile. We know that the BOJ is still on a hiking path. And absolutely, it is the one clear trade at the moment. If you're looking to short a bond, the Widowmaker is actually turning into a Rainmaker.
The BOJ is still on a hiking path, but a hiking path that could be slower going forward, given, of course, the win of Sanae Takaichi, who we know likes Abenomics and easy money as well. So are there any risks here?
Absolutely. And in many aspects and in many ways, traders are actually seizing on that as a key reason to continue selling Japanese government bonds, because we know that BOJ hikes will continue to weigh on capital gains, if any, and also the fact that, yes, it is a risk. It is a risk out there. Could the BOJ hike as aggressively as markets thought they would before, say 6 months ago? That's definitely muddied. But remember, bond traders, they don't like uncertainty. And in terms of when there are uncertain times, it's a good opportunity definitely to continue piling on to the Widowmaker trade. And it has made money. So clearly there's juice in this.
Yeah, from widow to rainmaker, as you say. But they have been burned in the past, right? So what are the risks surrounding this trade, and why are we not seeing perhaps more apprehension towards it?
Yeah, so again, history is definitely on the side of the BOJ here, and Japan as a whole. It has burned traders. What are the risks of the trade? Well, you know, perhaps all the uncertainty around the world causes the Bank of Japan to contemplate pausing its rate hike path. Could there be a sudden turn in inflation going lower for whatever reason, with the trade wars that are happening around the world and growth slowing potentially in Japan? Yeah, that's definitely another risk to the trade. So yeah, definitely history is on the side of Japan winning here, less so the traders. But for now, traders are definitely milking it rather than not.
They are piling in. All right, Ruth, thanks so much. Our senior FX and rates reporter, Ruth Carson. We'll have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how some Australian rare earth stocks are faring in trade today, because recently they have been rallying pretty hard, especially amid the spotlight being shown on critical minerals, rare earths, this cooperation between the US and Australia in particular. And then Australia's government also seems to be committing to more investments in some of these Australian rare earths related companies. You can see Arafura, for example, rising 8+%. Let's get more with Hayley Channa. She's director of the Economic Security Program at Sydney University's US Studies Centre. Really good to see you again, Hayley. So let's unpack first what is seen as a pretty positive outcome, to say the least, for Prime Minister Anthony Albanese. But what are you expecting next in terms of follow through from here on out?
Well, what I liked about this deal was that it set a 6-month timeline. So it shows that both the US and Australia are serious about getting after this problem in the short term. It also reflects how there were supply chain shortages this year in the United States. For example, Ford Motor Company said that after China had put on rare earth restrictions, they had to slow their manufacturing down. So we can see that there are real short-term supply chain gaps that need to be filled. And it's pleasing to see that both the US and Australia are going to co-invest. Some of the projects will be domestic, but importantly, some of them will be joint ventures. And in particular, we see the US investing in gallium in Australia. That's because the US is 100% reliant on gallium from China.
So, of course, these investments, co-investments that you outline as well, are going to be helpful. But to what extent is that going to actually be able to, you know, in terms of the timeline, help the US wean off the Chinese supply chain?
Well, I was actually thinking about this in relation to the COVID vaccine. You know, when the US sets its mind to something, it can create a vaccine in a short amount of time and really truncate that. Now, that is what our countries need to do for the processing of critical minerals and rare earths. This processing technology has been developed over literally decades by China. It has been refining its methods. Some of the methods can be environmentally damaging. We're talking about acid leaching, including straight into the ground, and there have been real problems around the Chinese mining sites. China is trying to get better with its processing, and it can be done in a more clean way. And that is what Western producers will need to do, is to do it in a much more environmentally friendly way. Not always outsource it to other countries, although Malaysia, Vietnam and India are key countries looking at doing the processing. But for a change, there's a gallium refinery in Western Australia that is going to be propped up by this deal with both US and Australian investment. And that shows that Australia is trying to move down the value chain and value add to this strategic resource.
Hayley, I know that hindsight is 2020, but I wonder why we're still talking about rare earth minerals and the dominance of China, because I remember this issue came up, 15 to 20 years ago. So how long will it take to finally the world be weaned off the dependence on Chinese minerals?
Look, it's a valid criticism to say our governments have been asleep at the wheel. However, there is just no commercial reason to do the processing. That's why countries like the United States and others have outsourced the processing to China. It's you only need tiny amounts of critical minerals that go into your mobile phone or your computer, your car, or defense applications. But if you don't have that tiny little bit, your application won't work. And so there's no commercial quantity of scale that is actually going to force the private sector to do this on their own. Anyone that knows the mining sector knows that miners like to extract as much value as possible from their mines. And there's a lot of these critical minerals and rare earths in the mine waste, the tailings, that could be extracted, but miners simply don't do it because it's not commercially viable. That's why you need the US government, Australian government, to actually work with these miners and start to value add by including some pilot processing facilities on existing mines. And that will help actually use the entire part of the supply chain.
So Albanese is now saying that the deal is about $8.5 billion pipeline. Are the public and private partnerships, from what we can see so far with still the lack of details, sort of a good setup in order to get the government incentivizing these projects?
Yes, anyone that's been following this space this year might remember that the US Department of War invested $500 million in the US's main rare earths miner, MP Materials, which has a mine in California. After the US government invested that amount of money, that's when we saw companies like Apple decide to come in, and that really crowded in that private sector investment. This deal between the US and Australia is hoped that it will do something similar. It will be a signal to industry that government is taking equity stakes. Now, this is a step change for Australia. It doesn't usually like to take equity stakes. Part of its industrial policy has included tax credits for the production of minerals, but not so much the equity stakes. Now we see Australia taking equity stakes in Arafura and in the Alcoa Sojitz deal. So this is a really strong signal from government to the private sector. And Australia has a lot of large wealth holders, superannuation companies, for instance, Australian banks, that could be investing in this now that they have confidence from government.
What are the considerations on the side of the firms from governments taking equity stakes in them?
Well, like any investor, they want to make sure that their risk is offset. And the biggest risk right now is that the processing technology does not exist. So, for instance, there's only one Australian company, Lynas Rare Earths, that has cracked the code of heavy rare earths refining, which it does in Malaysia. Now, there are fast-tracked efforts between many countries to gain this knowledge back, particularly in Japan. They're actually getting elderly people, 80 years plus, out of retirement to teach people how they did the refining back in their day. But this is knowledge and know-how that's been lost, and it needs to be gained back. But also there can be innovations so that some of this processing is done in a cleaner, greener way. And that will be really important. I think the last thing to note about that too is how those costs are passed on to the consumer, because all of that higher quality processing costs extra money. And so if those costs can be passed on to consumers, some of these companies can recoup those costs.
Hayley, great to hear from you and get your insights on this in what seems like really pivotal agreement between the US and Australia in securing supply chains. Hayley Channa is Director of the Economic Security Program at the University of Sydney's United States Studies Centre. We have more on Australia ahead every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com. Shery?
And you can hear more about Australia's economy in the coming hours when Treasurer Jim Chalmers joins Insight with Hazinda Ahmed live at 11:30 a.m. in Hong Kong. That's 2:30 p.m. in Sydney. We have more ahead on the Asia trade. This is Bloomberg.
Here are some top corporate stories we're tracking. Amazon Web Services, the world's largest cloud provider, says operations are back to normal after a widespread outage that hit a broad spectrum of customers for around 15 hours. The episode disrupted hundreds of websites and apps, including the likes of Venmo, Robinhood, and Apple TV. The outage was caused by a database network issue and highlights how much of the internet is dependent on the operations of a single company. Apple shares hit their first record this year after Loop Capital upgraded the stock to buy from whole, citing positive iPhone demand trends. Shares rose around 4%, surpassing an all-time high that had stood since December. And this recent strength comes amid signs that the long-awaited iPhone upgrade cycle may be underway. Of course, Shery, we're watching how that plays out in Asia markets as well.
Yeah, we're looking at suppliers across Asia. We're looking at rare earth minerals as well. We're looking at broad upside across Asia. The Kospi extending its record high. This is Bloomberg.